What's up, everybody? Welcome back to another episode of Pulse on the Market. We're gonna jump right into it because today was a good day for the market for investing in general. And just to start off with a couple numbers, the Dow was up 0.9%, 0.97 at 38,519. The Nasdaq up 1.2, and it's currently trading at 17,344. The S&P up 1.25% at $4,906. And the small index is at 1.39% at 1974. And so it seems what I speculate of what happened was yesterday with the Fed rate cuts, right? There was a lot of disapproval of the rate cuts. Everyone was expecting at least a hint at a future date, but the Fed came out and said that we will not be expecting a rate cut until inflation falls. But inflation has not been decreasing very rapidly, so a lot of consumers did not like that news and ended up selling, and we saw an overall selling of the market as we saw yesterday. But it seems like today the market got over their little fit, threw a little temper tantrum, and now they're back in business, and with these good numbers for the market. And stocks of the day, I think the stock of the day for me is Deckers Outdoor Corporation. They are the parent company for Hoka and for UGG. You've definitely heard those two names before, and they just came out with a stellar earnings report. And they reported 15.11 EPS, and they're estimating 11.47. That's crazy. So there's a 31% increase, and they just made some solid projections for the next year. They lifted their fiscal year forecasts, and they even announced a new CEO. So in August 1st, it'll be effective that Dave Powers, the former CEO or current CEO, will retire from his role as CEO, and their CCO, their Chief Commercial Officer, Stefano Caroti, is to become the new CEO. And so that's a good look. The investors are happy with Deckers right now. And as you can see, the price shot up well past 800. Right now, post-market is trading at $810.50. But it was all the way up to 830, 835, I believe. And it skyrocketed. And this is one of the plays that I like to go into. When it comes to earnings reports, I like selling options on. I don't usually buy options. I'll usually buy puts to risk mitigate a little bit. So I didn't buy a put on this one because I was pretty sure they were gonna beat the earnings report. I was researching into it, and it was interesting that the Uggs were selling out come Christmas time. I thought that trend was dead, but I see all these girls walking around the college campus with Uggs on. And Hoka's, obviously, there's a lot of reviews of people saying they feel like clouds on your feet. They give you a little bounce to your step, and people are loving the shoes. And they actually acquired, get this, they bought Hoka for 1.1 million. I don't remember when they bought it. Let me look this up real quick, because this is good stuff. But they bought it for 1.1 million back in, let's see here. Yeah, in 2013. So Hoka was purchased on April 1st of 2013 by Deckers, and they grew their sales from just a few million up to 1.3 billion. I don't remember exactly what it was at, but it's insane the growth that they've seen in the Hoka shoe. That was a beautiful investment by Decker Brands, and now we can see the fruits of that labor. And with a stock that's growing ever more, $15 per share, or yeah, 15 earnings per share. EPS is quite impressive, and they just keep surprising. In the last earnings report, they beat estimates by 53%. So the report was 6.82, and the estimate was 4.43. So they just dogged on that estimate as well, and they did it again this quarter, which is just very impressive. So I'm impressed with Decker, and the premiums for the options were beautiful too. I think to sell a covered call, if it was at 570 and it was at 590, or the covered call for 590, the premium was around 23 to 2500 just to sell the covered call. So if you did that, you made $20 on appreciation just from just from the call itself, and on top of the $2,500 premium just for selling this covered call, selling the rights for someone to assign you those shares, or for you to give them those shares at $7.90. Which honestly, if you would have just bought the shares, it might have been a little better. It depends how Deckers performs tomorrow. I speculate that an increase in their price will occur, obviously, especially with that good of an earnings report. It's quite impressive, and I will see it. We'll most likely see it rise tomorrow. And yeah, and you could even sold a deep in the money covered call at $7.35 for around $6,000, and you still would have made $1,600 to $2,000, like $1,600 to $2,000. Like max profit, and it would have had to drop all the way down to around 705, 710 just for you to lose money, which would have been over a 10% decrease, that is a fair play in my opinion. And it is quite similar to selling just a put in the money, but I did the math on a few different, I think 5 different stocks, and you actually make a little more money if you sell an in the money covered call rather than selling a put. So I ran the numbers, and so now from here on out, I always just run covered calls deep in the money instead of selling a put. And it's just, I like that a lot more, and you make a little bit more money. I don't know if how many people know this, or if there's a catch to it. Who knows? I'm not sure. But for now, I'm just going to keep selling these covered calls, and I like owning the shares of companies that I like too. All right, so if we look at this, Apple up 1.3%, Tesla 0.8%, Amazon up 2.63%. I think they're going up post-market as well. Yes, they're up 6% post-market. So they had EPS of 1. The projected was 0.79. So they had a 25% increase in their EPS, and the investors are loving it. So it's up 6% post-market, which is impressive. If we look down here, so those are impressive numbers by Amazon. And Google up 0.6%, Coinbase up 5.5%. If we look over at Bitcoin, so Bitcoin's at 43,000. And so we did see an increase. So right when the spot ETFs came out, there was a surge. It went up to 49,000, right? But then we saw buy the rumor, sell the news type is what people are saying, where the stock immediately tanked down to what I believe was 38,000. It was around that range. And a lot of people freaked out. They're like, well, it was just a rumor. Like, it was overhyped. But this happens. We saw this coming. But what's even more impressive is just the influx of money going into those spot ETFs for Bitcoin. Billions of dollars. People are investing in this because they know the long-term potential. For crypto, it's long-term. You can't be day trading crypto. I mean, you could, but that's not the most effective way, in my opinion, to play the crypto world. So coming up is the Bitcoin halving. So they're going to cut the ability to mine Bitcoin in half, so you get half the supply. And historically speaking, the price of Bitcoin goes up dramatically during the year of the halving. So starting in April, they're going to have Bitcoin, and historically speaking, the price should go up. If it's like with the same ratio as it was in the previous, and what was it in 2016 or back in 2020, 2016, 2012, then it should go up to around 100K plus minimum. But we'll see what happens to Bitcoin if it's a similar reaction. Yes, historically speaking, it could perform like that, but nothing's certain, especially in the crypto world. And the thing with Bitcoin, when Bitcoin goes up, because the market cap on Bitcoin or on crypto as a whole is still small, that all the other cryptos get affected by Bitcoin when it goes up and when it goes down. It's very evident. But once crypto grows and there's more subsections of whatever it be, because in the market we got utilities, we got real estate, we got those different subdivisions, subsections of stuff to invest in. Once that happens for crypto as well, and it's more defined, then things will be less influenced by Bitcoin. For now, I'm fine with it because the Bitcoin halving's coming up, and I would look into like the altcoins. This is not financial advice whatsoever, but just the altcoins have a pretty solid potential of just skyrocketing, where you could see 200%, 250% in Bitcoin. You could see 1,000, 2,000% in the smaller coins that get affected by Bitcoin. you need to do your research, and there's a lot of different ways to pick out cryptocurrencies that you believe are going up. There's a lot of different factors of the narrative, the product, what their purpose is, how useful they're going to be in 10 years. So there's a lot of things that you need to look into before investing in cryptocurrency. It's not as simple as just investing it in whatever you see fit. Like, you need to do your research. It's gambling if you don't do your research. So I would definitely look into that. And yeah, so there's some other news, but for the sake of time, we need to call it for day 2 of this podcast. And this is my second run at it. I still hope no one's listening to this. I'm still trying to find my voice. I'm still doing a little research. Later down the road, I do plan on providing better content for you guys. I plan on going into deeper research to provide clearer and more accurate information that's going to help you guys become more empowered investors. And yeah, regardless of age, I know I might be young, but the info's out there for everyone. It's just a matter of who's going to go in deep into the weeds and find out. And I hope to regurgitate that information for you guys so that you can make better decisions in the stock market and in the market in general. And I appreciate you guys for your time, for listening. And just before I finish, I'd like to just read off a little disclaimer that this podcast is for informational purposes only and does not constitute financial investment or legal advice. The content provided is based on the host's personal opinions, which would be me, and experiences. Listeners are advised to conduct their own research and seek the advice of qualified professionals before making any investment decisions. The host and guests do not guarantee the accuracy or completeness of the information shared, and they are not responsible for any actions taken based on the content of this podcast. Investing involves risk. It's all risky, as Jim Rohn once said, and past performance is not indicative of future results. The host and guests are not responsible for any losses or damages that may occur as a result of investments made after listening to this podcast. Once again, thanks guys for listening, and let's go out there and take advantage of the market, and let's go make some money.